Mm, yeah. Welcome back, everyone. In this video, I will discuss how you can make $200 a day simply from understanding support and resistance. Oftentimes, I get asked questions about what I use in order to know which trades to make. Many will ask if I use the stochastic or Bollinger Bands as the main indicators, and while those are useful, I like to primarily focus on support and resistance, especially for beginners. So first things first, let's discuss what support and resistance is so that we have a clear definition. Essentially, support and resistance are the two fundamental concepts in technical analysis. So you'll always hear stock traders talking about support and resistance. Reason being is that if you can understand how these two work, you can begin to correctly read price charts. So, to define it, support and resistance can either be a price level or a price zone on a chart, as you see on the screen. Alright, so with that, it's also important to know that prices obviously fluctuate due to supply and demand. When demand is larger than supply, prices rise. When supply is larger than demand, prices fall. Within stocks, sometimes prices move sideways as both supply and demand are in equilibrium, but that's a discussion for a whole nother video. Because that can lead to profits as well if you know what you're doing, especially if you can properly read dojis. Again, I'll explain that later. So the question that is posed is, what exactly is resistance? Okay, when there's an uptrend, prices of course rise. So as mentioned, when the price goes up because there's more demand than supply, in terms of technical analysis, you'll clearly see a level on a chart that shows supply overwhelms demand, and that is resistance. So what is support? It's the exact opposite of resistance. When there's a downtrend and prices fall, there's an overload of supply. The lower prices go, the more people are waiting to buy those shares. But eventually, prices will stop falling, and at that point, support is met. So now that you know what the terms are, we can begin to talk about trade signals. Once an area of support or resistance is reached, those price levels can serve as potential entry or exit points to make a play. As the stock price moves, if it reaches an established point of support or resistance, it'll either do one of two things: reverse the support or resistance level, or break the price level until it hits the new level of support or resistance. So now that brings up the mentioning of trend lines. The support and resistance of a level discovered with a trend line or moving averages is perceived to be stronger, as historical analysis is pretty consistent. Okay, so what does that mean? Let's take a look at an example. Oh wait, before we do, just understand the basics. Remember that support and resistance is identifiable on all charting time periods: the daily, the weekly, the monthly, and even a yearly chart. Additionally, you can view support and resistance on smaller time frames like the 1 minute and 5 minute charts as well. However, keep in mind, the longer the time period, the more significant the support or resistance will be, so you get a better grasp or like a clearer picture of the chart analysis. So let's take a look at this example. We see from this chart that this stock is on an uptrend over the course of 9 months. But take a look at the movement of the stock from September to November. We clearly see that a trending support level is about 82.5 or 83 based on the price range. We also see that the resistance level is about 98.5 or 99 as it touches that price but does not get any higher. This shows a clear ceiling and floor for the stock, with the median of the price being about 90.84. So let me put this in context to show you how this all ties together. To further elaborate, the relative strength index, known as the RSI, goes hand in hand with support and resistance. When the RSI is around 30, that means the stock is oversold, which presents an opportunity to buy, meaning you should make a play for calls. When the RSI is at or above 70, that means the stock is overbought, and that presents the opportunity to sell and make a play for puts. Oh, another helpful tip. Remember to always set your stop loss under the old support level. I'll make a video covering trail stop automation so everyone can understand how to do that. So let's take a look at how to actually make money off support and resistance. For me, the easiest way to make a play to gain $200 a day in profits is to look for the elements I just discussed, meaning searching for stocks in ranges that are oversold or overbought. When you see those stocks that have reached the RSI at extreme high or low levels, that can be your biggest clue on the trade that you should make. If you're a beginner, I would suggest making one play on each for about $100. So $100 on calls and $100 on puts so you can learn the market. And please do not feel like you have to use actual money. Thinkorswim has the paper money account feature as an option to test out your trades, and it's very beginner friendly. So back to the example. When watching the charts, if you see the RSI reach the 20 to 30 range on a stock, be prepared to make a trade for calls if you have at least 3 indicators that are showing that it's a smart move. Transversely, if you see the RSI reach the 60 to 70 range on a stock, be ready to make a trade for puts, but again, have at least 3 indicators that verify that the play is likely advantageous. That way you can grow your account. It's never a good idea to jump into a trade based on having one clue only. It's best to have at least a few that show the trade is a good play. So with that, we see on the screen, in late August, early September of 2021, this stock broke resistance, and as the RSI rose well above 70, historical analysis teaches us that what goes up must come down. We see that by October, the stock had fallen, and this remained true. Now let's look at May of 2022. Towards the end of the month, the stock fell and reached 30 on the RSI. It didn't quite break support, but from there, the stock then rose back up over the course of the next few months, and it didn't return back to that level until around October. So looking at the touch points for this example, you can see the trend. When the stock reaches a low RSI, it then rises. When the stock reaches a high RSI, it then falls. So I hope all of this makes sense. Just remember the key takeaways. You use support and resistance levels to identify price points on a chart because they are likely to show the possibility for a reversal of the current trend. And remember, support occurs when a downtrend is expected to stop due to a high level of demand, and resistance occurs when an uptrend is expected to stop due to a high level of supply. If you're new to this, just keep practicing and this will all make sense the more you read charts and as you do your due diligence. Thank you all so much for watching, and I'll see you in the next one.